Howdy folks, quick tutorial on small business structure. This is a common topic in our company with our clients as we grow and start up businesses. And with the pandemic, this is kind of brought back up to the surface, and there's a lot of discussion and confusion around the structure of small businesses. So real quickly, when you start a business, by default, you are what's known as a sole proprietor. Okay, about in the 60s, you could be a sole proprietor, or you could structure yourself with the federal government to be a C Corp. And that was really your only two options. And then in the 70s, the state started adopting LLCs. And so the way this works is, as a sole proprietor, you can just start doing business. The money you make is subject to tax as a business. Under a sole proprietor, you have no asset protection. Okay. And you're going to pay self-employment tax, which is 15.3% on all profits. Okay. Now, back in the 60s, you had that choice, or you could become a C Corp. Now, a C Corp offers asset protection, but you pay corporate tax. If you are a small business or a startup and you are structured as a C Corp, my suggestion is to maybe find a second opinion. This is the most expensive. And unless you are a large corporation with 75 or more shareholders, this is a poor fit for a small business. So don't get yourself into the corporate tax of a C Corp. Okay. So in the 70s, the state started adopting the LLC. So what an LLC does is that offers asset protection. Okay. But you still pay the self-employment tax, the 15.3% on all of your profits. Okay. And then the government created the S Corp, which is the most beautiful thing that we've seen in small business. The S Corp is, if you know me, and I'll talk about this all the time, this is the number one tax saving strategy for growing small business. So under the S Corp, you have to have an LLC in your state to get an S Corp election with the federal government. But under the S Corp, you still have the asset protection, but you no longer pay self-employment tax. Okay. What happens is you get to pay yourself a W-2, which is deductible to the company, and then the rest of your profits, you still pay income tax on, but you do not have to pay the self-employment tax on. Okay. So when you look at these options, small business owners say, well, why wouldn't I just be an S Corp out of the gate? Okay, well, there is costs and requirements that go with the S Corp. And before you get yourself into the S Corp structure, you want to make sure that your organization is to that level and can fund it. So really the sweet spot for me is when bottom line, not what you make in sales, but what you make net profit, when you get into about $30,000 to $40,000 bottom line net profit, that's where we're going to look at switching you to an S Corp and start to save you tens of thousands of dollars in self-employment tax. Okay? Got other questions? Let us know. Small Business Matters, hold the BS.